Let's get some perspective on all this from Otto Dichtl, desk analyst in the fixed income group of Knight Capital Europe. Hi, Otto. Thanks for joining us today. You're saying about 700 billion euros per annum over the next 3 years needs to be rolled over, refinanced, but you don't think it's going to be a problem?
That's correct. That's my view, at least. I think there are a number of factors that will actually reduce the funding needs of the banks. Among them is the fact that a lot of them have large runoff portfolios, which in a sense will reduce the funding needs going forward. There's a few other factors, but essentially I think a little less.
Are we going to have a 2 or even 3 tier, though, banking market? The strong, bigger institutions will fare well in their quest to refund, but the periphery European banks might have a tricky time even accessing the market.
Yes, I think that is a very fair point. It certainly looks that way at the moment. I think investors are very comfortable with the largest internationally operating banks. On the other hand, the other end of the spectrum, second-tier, third-tier banks from the peripheral economies in Europe will certainly struggle, at least for the time being.
Does that mean that, markets will effectively remain shut for many periphery banks?
I think that might be the case for some, at least absent any government guarantees for those kinds of banks. So in other words, they will remain reliant on government guarantees.
And Ireland, of course, has guaranteed Irish banks' debt, but definitely through the end of this month and probably to the end of the year, would we expect Ireland to roll over the guarantee through 2011 and as long as it's needed?
Yes, I would very much expect that. Whether they will extend it for a full year or maybe on a sort of rolling quarterly basis, that's right. That's not clear, but certainly they will extend the guarantee as long as it's necessary.
Do you think Ireland's going to have a problem? I gather that up to 25 billion euros of debt has to be rolled over. Do you think it'll have a problem?
Well, it's certainly a challenge at the moment.
It is, isn't it?
Let's say.
And if Ireland does have a problem, is that going to have wider implications for the banking industry as a whole? Is it going to be seen to be a litmus test of appetite? Yes,
I think it could be, actually. And clearly we've had early in the year a lot of sovereign issues, and I think given the government guarantees, it's a linked issue, really. And if the Irish bank funding would struggle in the next 1 or 2 months, I think that could resurface some of the concerns that we've had early in the year. So yes, an important test.
The next 2 months are very important. Otto, thanks for joining us.